Welcome to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra. Want to increase your financial IQ with today's episode. The last 2 years has really been a difficult time for investors, both stock market investors and bond market investors. So the team and I did a little bit of an analysis recently, and this information is as of October 31st, 2023. We went back and looked at the previous 24 months. So that's from October 31st, 2021 through the end of October 2023. And what we found is across the board, major indexes, both stocks and bonds, were negative over that period. So 2021 was a good year for the market, a bounce back after the scare of the pandemic, especially in that spring of 2020. 2021 was a good year. 2022 generally was a bad year, although the fourth quarter was good. 2023, as of this recording, has been solid. Not great, but solid. But going back to the analysis, the 2 years has been really challenging. And as I speak and meet with clients, I could feel the tension because people are unhappy and they recognize that they really haven't prospered the way that they would have expected over the last 24 months. Of course, this also comes at a time when we've seen terrific inflation. I say terrific. I don't mean that in a positive way. We've seen inflation where the cost of food, shelter, utilities, even gas are all up fairly significantly to very significantly over that same time period. So I'll throw some numbers out at you. I have a long list, but representing, if you look at bonds, the Bloomberg US Credit Bond Index over the 2 years, negative 8.74%. Bonds have been a tough place to be. High yield bonds, which are lower credit quality bonds, down 3% over that 2-year period. Moving on to international stocks, the EFA index, that's the major international index, down 6% over that 2-year period. The NASDAQ, down almost 9%. The Dow Jones Industrial Average, down almost 4%. The Russell 1000 Growth, down 5.25%. Russell 1000 Value, down 3.5%. Russell Midcap, down 9.4%. The S&P 500, down 3%. The S&P 500 Midcap 400, down 6.5% almost. So you could see over the last 2 years, there's been very little place to hide. If you've been an investor, even if you're following best practices like diversification, incorporating different types of stocks, big, small, medium, domestic, internationally, and combine it with that some element of bonds, corporate bonds, government bonds, they have all seemingly struggled over the last 2 years. So we're in a bit of a funk. Again, this year, as of the recording, we've had a decent bounce back over the last 12 months with a rebound that started in early October of 2022. But we're still in a funk when you look at 2 years, and a lot has happened over the 2 years. And again, I could sense people's frustration, my frustration included, because it's been a rough go. When you look at account values, returns, it's been really disappointing. So my message to you, if you're listening to this, especially if you're a client of ours, but I'll say more broadly, everyone listening, is don't despair. This has happened before in history. Periods of underperformance or poor performance have often been followed by periods of outstanding performance. I don't know when that'll happen. I cannot guarantee it will happen, but history, like I said, has tons of examples of periods like this giving way to exceptionally good periods. So I continue to be optimistic about the future, despite some of the difficulties in the market, in the economy. I am an optimist at heart. So I think that the way that we work with our clients, proven, long-term strategies that have worked over extensive periods of time will work again in the future. I can't guarantee it. Nobody can, but I have a high level of confidence based on my 30 years of experience, plus based on my historical understanding of the economy and markets and trends. So I'm not freaked out, although I am disappointed. I feel like you might be also, but don't despair. I hope you found this information to be beneficial. That was the goal of this episode, like all of the episodes. Please subscribe to the podcast. Go to my website, elliottwealth.com. Look up information about how we help our clients win with money, the work that we do, the team and I here at Elliott Wealth Management. Check it out, and I'll be back with you on the next episode of the Simply Financial Podcast very soon. Thanks for listening.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.